there, good morning, and you're watching Market Cafe with me, Snehi Shah and Ankita Saxena on ET Now. Now, lots of cues that we will keep on our radar this morning, but before that, Ankita, take us through what the global handover look like, and also after we discuss that, we will look at all the stocks that you should be keeping on your radar today, as well as all the other global stories that we've been tracking for you. But to begin the show, Ankita, take us through what the global handover look like.
Good morning to you, Snehi, and good morning to everyone. So the US markets inched lower yesterday. I mean, there has been pressure on the treasury yield side that we have been talking about, and also the banking shares fell yesterday, and that was weighing down the US markets. So US indices closed lower, weighed by declines in bank and retail shares, and also concerns over the rising treasury yield. Several regional and larger banks fell after S&P Global cut credit ratings and revised its outlook for multiple US banks on Monday, citing tough operating conditions. S&P 500 edged 0.3% lower. Dow Jones lost almost 174 points in trade, but Nasdaq Composite was absolutely flat, ended the day in the green, but absolutely flat on that index. Now, Dick's Sporting Goods and Macy's fell by 24% and 14% respectively on cautious full-year forecast. Nvidia is set to report its earnings today. And of course, the mega event, all the investors are also looking ahead to the key speech by Fed's chairman, Jerome Powell, on Friday at Jackson Hole. So that's something that everybody is waiting and watching out for. The European markets, however, closed higher. Now, the French game publisher Ubisoft Entertainment rose 9% after Microsoft said it would divest several gaming rights to the company as a part of a new deal submitted to the UK regulators for its takeover of Activision Blizzard. Now, the British manufacturing data also came out, and the output dropped by the most since September 2020. Now, if you look at the European indices, DAX was up 0.6%, and FTSE was marginally up 0.1% in trade. So, a mixed global handover coming in there, Snehi.
Absolutely, Ankita, mixed global handover coming in over there. With that, let's also look at what the crude did, and oil prices settled lower on Tuesday as investors remain focused on the likelihood that China's economic woes will keep hobbling demand from the world's top crude importer. Brent crude was largely just about that $84 mark, largely unchanged levels coming there for the Brent crude. When you look at WTI crude as well, WTI crude also largely unchanged at that $80.3 per barrel mark. Now, the front month WTI contract settled down 37 cents, just above that $80.35 mark a barrel on very limited volume ahead of its imminent expiry. Now, China, the world's second largest economy, is considered crucial to shoring up oil demand over the rest of the year. Its sluggish economic activity has frustrated markets as pledged stimulus has fallen short of expectations, including a smaller than expected rate cut in the key lending benchmark on Monday. Amplifying demand concerns, US central bank officials have not ruled out further interest rate hikes to contain inflation. The US is expected to continue to draw on its oil stocks. Now, preliminary Reuters poll showed that crude oil and gasoline inventories were expected to have fallen last week, with data from American Petroleum Institute due later in the day. Meanwhile, the Iraqi and Turkish oil ministers have also discussed the importance of resuming oil flows after finalizing pipeline maintenance, the Iraqi state news agency reported, a development that could finally boost global supply. Remember, Turkey had halted Iraq's 450,000 barrels per day of exports, which roughly makes up of 0.5, so 0.5% of the global supply through the northern Iraq-Turkey pipeline in March. So lots of global actions and global geopolitical actions will weigh on crude prices going ahead. We'll keep an eye out for how that pans out for crude prices.
All right, Snehi, then we'll move on and look at all the events that are likely to take place today. Of course, TVS Supply Chain is listing on the bourses today. We also have Eicher Motors that will be holding its AGM. And the biggest event of the day, Snehi, perhaps is going to be the Chandrayaan landing on the moon. So all eyes will be on that, and we will be tracking that very closely for you.
Absolutely. With that, let's also look at some of the global stories that we are tracking for you this morning then. And Meta announces the web version of the newly launched Threads app in a bid to retain professional users and gain an edge over its rival X. Meta CEO Mark Zuckerberg said on a Threads post that the web version would reach users over the next few days. Remember, Threads had crossed 100 million signups within 5 days of its launch, but currently it is witnessing a decline in its popularity.
And Chinese tech giant BAIDU reported better than expected Q2 results. Revenues were up by 15% on a year-on-year basis, largely led by the growth in advertising. This was the fastest quarterly year-on-year growth pace in 2 years.
And following Moody's lead, S&P Global has downgraded ratings and outlooks of several U.S. regional banks, citing increased funding costs and issues in the commercial real estate sector. Meanwhile, the rating action weighed on the stocks of major banks. Shares of JP Morgan Chase and Bank of America both fell almost 2%.
And well, back home, India will be waiting for Chandrayaan-3 to make a landing on the lunar surface at 6:04 p.m. today. India will be the fourth country to be soft landing on the moon after US, China, and erstwhile Soviet Union. But we will be the first ones to make it to the south pole of the moon. Now remember, the possibility of finding water makes this all the more important for India to make a successful landing. Times Network had an exclusive interview with K. Sivan. Let's listen in to an excerpt of this conversation.
Basically, this after the separation, till now, these all operations, all the increase in the orbit or reduce in the orbit, everything is done by propulsion module. Now that task will be carried out by lander module. So now the next phase is it has to be circularized to the orbit is something like 150 by 160 or so. It has to be circularized to 100 kilometer. After 100 kilometer, again it will be further reduced to 100 kilometer by 30 kilometers one side. And from 30 kilometer onwards, it will start coming down and land. That is the plan.
Well, that's the word coming in from K. Sivan, but also remember we've had officials from ISRO saying that there might be a possibility that they might postpone the soft landing of the rover because of its high speed. Now, they have said that this might be pushed to the 27th of August, but let's hope everything works out, the speed is in control and the landing happens as per schedule at 6:04 today. But moving on then, the 3 days BRICS summit has begun amid buzz over a possible bilateral meet between PM Modi and China's Xi Jinping. Prime Minister Narendra Modi said India will soon become a $5 trillion economy and is poised to become the growth engine of the world in the coming years. Speaking at the BRICS Business Forum Leaders Dialogue, Modi highlighted that mission mode reforms has improved the ease of doing business in India and invited businesses to be part of the country's development journey. Listen in.
वैश्विक अर्थव्यवस्था में उथल-पुथल के बावजूद भारत आज विश्व की फास्टेस्ट ग्रोइंग मेजर इकोनॉमी है। जल्द ही भारत $5 ट्रिलियन इकोनॉमी बन जाएगा। इस बात में कोई संदेह नहीं कि आने वाले वर्षों में भारत विश्व का ग्रोथ इंजन होगा। ये इसलिए है क्योंकि भारत ने आपदा और मुश्किलों के समय को आर्थिक सुधार के अवसर में परिवर्तित किया। पिछले कुछ वर्षों में हमने मिशन मोड में जो रिफॉर्म्स किए हैं, उनसे भारत में ईज ऑफ डूइंग बिजनेस में लगातार बढ़ोतरी हुई है। हमने कंप्लायंस बर्डन को कम किया है, रेड टेप को हटाकर रेड कारपेट बिछा रहे हैं। जीएसटी और इंसॉल्वेंसी एंड बैंक्रप्सी कोड के लागू होने से इन्वेस्टर कॉन्फिडेंस बढ़ा है। रक्षा और अंतरिक्ष जैसे क्षेत्र जिनको प्रतिबंधित माना जाता था, आज प्राइवेट सेक्टर के लिए खोल दिए गए हैं। हमने पब्लिक सर्विस डिलीवरी और गुड गवर्नेंस पर विशेष रूप से ध्यान केंद्रित किया है। टेक्नोलॉजी के इस्तेमाल से भारत ने फाइनेंशियल इंक्लूजन की और एक बड़ी छलांग लगाई है।
Well, with that, it's time for a quick breather. Don't go anywhere. After the break, we go domestic.
Hi there, welcome back. Still logged into Market Cafe. This is ET Now with me, Snehi Shah and Ankita Saxena. Now, before we went to the break, we told you we'll go domestic once we're back. And let's look at what the Asian markets are doing this morning. And Asia-Pacific markets are mixed on Wednesday as investors assess private business activity surveys from Australia and Japan, as well as inflation figures from Singapore. In Australia, the ASX 200 is up 0.6%, up 44 points, reversing earlier losses. Now, Australia's business activity has contracted at the fastest pace in 19 months, according to Juno Bank, with its flash composite purchasing managers index coming in at 47.1 for August. Next, let's take a look at Japan then. And Japan, you can see the Nikkei is up 0.2%. Now, the country saw a faster expansion in its business activity with its flash PMI for August at 54.3 compared to July's 53.8 levels. Now let's look at all the markets that are trading in the red this morning, and Hang Seng is down nominally, just 16 points down, very minor cuts coming in from Hang Seng, but it's in the red nonetheless. Kospi also mirroring these losses, almost 0.2% down, a downtick of 4 points coming in for Kospi. And lastly, we'll also take a look at Shanghai. Shanghai also down almost 0.5%, 14 points downtick coming in for the Shanghai as well. Now GIF Nifty is at 19,359, which is very close to the levels that Nifty closed at yesterday, up only 0.2%. So we'll see how that pans out for the markets, indicating a flatter start. But let's see how that pans out for the markets this morning. Okay. Hi there, welcome back and thanks for staying tuned to Market Cafe. Now, only 50% of rural India brush their teeth daily, and the rural volumes will double if we are able to inculcate oral habits. This is the word coming in from Colgate-Palmolive's MD and CEO Prabha Narasimhan. She also sheds light on consumption patterns and impact of inflation on the raw material costs. Listen into this conversation she had with my colleague Aishwarya Patil.
Well, we're all smiles today at the Colgate-Palmolive Brand Days 2023, and I'm in conversation with the MD and CEO, Prabha Narasimhan. Many thanks for speaking to us today. It's quite a delight to speak to a CEO or an MD helming a FMCG brand at this point, because most of them we've spoken to earlier have been men. So it's very refreshing and delightful. Since you've joined Colgate, what have you changed for the ladies here?
So thank you very much for having me. It's really been a pleasure. And I must confess, my very first answer to your question is perhaps going to be not a lot. I think a lot of the focus that we've put is really on building the fundamentals of this great organization, which hopefully benefit all genders pretty much equally.
Right. Equality is the way to go, of course. But let's talk about the various categories and how Colgate-Palmolive has done in the last. You've just been here for almost a year right now. But if you compare Colpal to other counterparts, how has it fared as compared to the industry as well as other competitors?
So I think firstly, it's a privilege to work with such a large and highly penetrated brand. I don't know how many people know, but Colgate is actually the single largest penetration brand in the country. 9 out of 10 homes have a Colgate product in the home in a given year, which is, I think, a great legacy to have and actually a great responsibility as well. Colgate is also obviously the market leader in the oral care category. Roughly half of the oral care category sits with this company, which again I think is a great platform on which to build. And the third thing that really struck me about this company over the last year is the single-minded commitment to driving the oral health of the country. And maybe I can help with an example there. If you take a look at the flagship product of this country, which is of this company, which is Colgate Strong Teeth, it actually incorporates arginine technology, which is quite at the forefront of oral care tech. It's quite an advanced technology. It does drive remineralization of teeth and stronger teeth. And we've put it into the standard product of this company just as a commitment to oral health and rather than putting it only in the premium ranges. So I think this commitment kind of runs through everything that this organization does. And those have kind of been the standout features for me of this company. And personally speaking, as I've come in new from outside, like you said, what has also struck me is the inclusivity and how warm this organization is, and how you can very quickly working here feel at home, which I'm very grateful for.
Right. Speaking of the penetration that Colgate has in terms of rural as well as urban market, what is it like at this point, and what's your target to take this company further?
So penetration of the oral care category is near universal, both whether it's urban or rural. And penetration of Colgate is exceedingly high. In both cases, about 9 out of 10 homes, whether it's urban India or rural India, in a given year would have a Colgate product in their house. So our opportunity for growth is not so much driving penetration, because there isn't really headroom on penetration. Our opportunity to drive growth actually sits in driving consumption. So let me just take a second to elaborate. If you see rural India, only about half the consumers brush their teeth daily. So getting them to brush daily becomes a key parameter that we need to move. And if you move that to urban India, while everybody brushes daily, only 20% of consumers brush twice a day. And your dentist will tell you that brushing twice a day is critical for oral health. So moving that.
And moving on then, in a very special edition called ET Now on the Go, we caught up with two of the biggest industrial groups in Pune, the Kalyani Group and the Bajaj Auto Group. Now, to talk about the manufacturing boom in the city and the country and the growth outlook of both the companies, here's an excerpt of those interactions.
A lot depends on the economy, but if you just compare FY23 with, let's say, how we exited in Q4, how Q1 performed, and how Q2 is shaping up, we can already see that the single-digit negative which the industry was in has now moved into single-digit positive. So Q1 was better than Q4, and July and August are seeming better than Q1. So it's still single-digit growth, but there is a point of inflection which has been navigated.
There's a very interesting change in the automobile market, and I'd like to draw a parallel here. The SUV market, it accounts for more than 50% of the total sales. The typical Maslow hierarchy in India was migration from cycle to motorcycle, motorcycle to a small car to an SUV. But the first time buyer is not buying a cycle, he's not buying the motorcycle, but he's buying a SUV. Is there a change in the way how patterns are emerging now?
Well, even today, in a lot of these in a lot of the motorcycle segments, almost 40 to 50% buyers are first-time buyers.
Okay.
You know, whether you're talking about the entry level or whether you're talking about the top end. So there is a lot of fresh influx, which is a very good thing. A very important contributory factor is the penetration of retail finance, which used to be a few years ago only 40%. But with all the digitization and all the initiatives of the government around Aadhaar and all that, the ability to take risk on credit has got vastly improved. And penetration of finance, retail finance, is now almost 76% in motorcycles and 90% plus in three-wheelers, organized finance I'm talking about. So all this has facilitated a movement upwards, because everyone, wants a better life, wants a better product, wants a better proposition. And that's getting, and as soon as you combine that with purchasing power, whether through retail finance or directly money in the pocket, you see an uptrade trend which is there. And that is what is playing out even across the motorcycle industry. If you see if you divide the motorcycle industry into two halves, the 125cc and above, and the 100cc segment, and if you rewind 5 years back, you will find that the 100cc segment 5 years back was almost 60% of the.
One number which markets and shareholders always look at is ROS.
Yeah.
Your ROS has fluctuated in last couple of years. Is that largely because of investments?
It is because of investments. And please understand, it took 12 years for us to incubate our defense business. It will take less than that for our EV business. It has taken less than that for industrial. Our overseas businesses have taken longer because Nobody could anticipate COVID and what it has done. But our ROCE targets are well in excess of 20%, and I'm confident that by 2025 we will be well in excess of 20%, 22, 23% or so.
So does that also means that you're assuming your global business will come back? It has to
It
normalize.
will come back. Of course, it will come back. Our European business will be profitable this year, and our US business will head towards profitability by the end of this year, and by next year that also should be profitable.
So what Bharat Forge has achieved in last 5 years, you're likely to achieve that in next 2 years?
I hope so.
Because for you, all your businesses now are filing full cylinders. You're ready. Capex is done, and now it's really operating.
Capex is done, but we also need to do more Capex, as we announced on our results call.
Yes.
We'll invest slightly over 1,000 crores in the next 24 months or so, in both our conventional business, in EV, in aerospace, and in industrial.
What are you doing to increase the moat around your business? Good companies always focus on that. How can they make the company more distinctive?
So we are increasing our moat by doing 3 things. One is, in our existing business, we will become the last man standing, which means the highest quality, the highest capability of engineering, most competitive cost-wise.
All right, that was ET Now's managing editor Nikunj Dalmia in conversation with Bharat Forge as well as Bajaj Auto. You can catch more snippets of these conversations throughout the week, but let's get a move on then. And brokerage firm UBS is bearish on Apollo Tyres and has downgraded it to neutral from buy after the company took price hikes over the last 15 months. Vamakshi joins in with more details on this. Vamakshi, tell us what this means.
Well, yes, Apollo Tyres is in focus on the back of a brokerage note that came in from UBS, and largely they have highlighted that the deleveraging for this business continues. India demand as well as profitability remain robust for this counter. Now, let's look at first the demand. Now, the India demand is appearing to be quite robust. They've seen an uptick of almost 7% come in the first quarter itself, and they're expecting that this could further accelerate, and that would mainly be driven by the replacement segment. Now, on the other hand, exports have witnessed some bit of pressure. They have weakened considerably, declining nearly 30% in the first quarter itself. In fact, it did lose some orders from the commercial vehicle manufacturers, and that was mainly on account of the pricing discipline. But the same is expected to reverse in the coming quarters. But all in all, the expectation is that a volume decline is expected in FY24. But nevertheless, the management is expecting the consolidated revenue growth to improve in the second half of the year. And despite the rise in crude prices recently, they are not expecting any commodity-related headwinds in Q3 as well as in Q2. And in fact, going ahead, they're expecting a stable margin performance. Now, when we look at the how the share has moved over the last 15 months, it has gained over 100%. And with that, the current valuation is at nearly 6.7 times the FY25 EV to EBITDA, and this is broadly in line with the company's 5-year average. UBS now believes that the risk balance is balanced, risk reward is now balanced, and they do see limited upside triggers for this counter. So given all those factors, they've actually gone ahead and downgraded their rating on Apollo Tyres to neutral from buy. They've also cut their target price from 440 to 430 rupees per share.
All right, Vamakshi, thank you so much for that. But stay on, you have other brokerage notes also coming in on Colgate and Polymed. Do tell us, what are these brokerages saying?
Well, yes, let me first start off with Colgate. We have a brokerage note coming in from Jefferies, and largely they have highlighted that in the analyst meet that was held recently, the long-term perspective was quite positive. There is positive commentary coming in from the management, but they also believe that there is a case to accelerate growth through aggressive investment. So given these positive factors, we have Jefferies maintaining its buy call on Colgate. They've also gone ahead and given a target price of 2,180 rupees per share. Other than that, watch out for Polymed, because we have a note coming in from Investec. They have highlighted that new therapies as well as the US ramp up is expected to drive the growth diversification going ahead. The ongoing capex is expected to double the capacity of the company, and in fact the company has demonstrated very strong execution as well as brand equity. Now they're expecting a sales CAGR of almost 22%, EBITDA CAGR of 29%, and PAT CAGR of nearly 31% from FY23 to FY26. So given all those positives, we have Investec initiating coverage on Polymed with a buy rating, target price of 1,690 rupees per share.
All right, Vamakshi, we will be keeping an eye out on those stocks today. But with that, we'll slip into a very short break. You stay tuned because we will be back with all the stocks that you should be keeping on your radar for today's trading session. Hi there, welcome back and thanks for staying tuned to Market Cafe. Now, as promised, we bring to you all the stocks that you should be tracking for today's trading session, and we are joined in the studio by Ansh for just that. Ansh, take it away.
Sure. So NBCC will be the first stock in focus for today's trading session, as company and DMRC has signed an MOU to collaborate on international building and infrastructure projects. Apart from this, Zydus Life Science will also be in focus, as on 23rd June, company had announced that within 2 months, they are going to buy 6.5% stake in MyLab Discovery Solution. Now they have come up with an update saying that it will be done in next 20 to 30 days. RITES will also be in focus, as company is the lowest bidder in a tender from a railway board. The expected order value for which is around 65 crore. BEML has got an order from Ministry of Defence for supply of command post vehicle, the order value for which is around 101 crore. Moving on to Linde India, company has received a letter of acceptance from Indian Oil Corporation to establish an air separation unit at company's Panipat refinery complex. Linde India plans to finance this project using its own funds. Lastly, All Cargo Logistics will be in focus, as company has created a wholly owned subsidiary called All Cargo ECU. This new subsidiary will handle logistics, multimodal transport operation and related activity. All of this actually aligns with company's core business.
All right, Ansh, we will be watching out for all those stocks very closely, but there is a new kid on the block that we will be tracking very closely as well, and that is TVS Supply Chains, which will be listing on the bourses as of today. Let me just take you through the details of the company. Well, the issue size was for 880 crores for this company, and the listing price span was between 187 to 197 rupees per share. The fresh issue was for 600 crores, whereas the offer for sale was for 1.42 crore shares. Now, post-issue, the implied market cap for the company is likely to be around 8,332 to 8,746 crores or thereabouts. Now, the objective of the IPO, as the company said, has been the repayment of debt for the company's subsidiary TVS LI UK and TVS SCS Singapore, and also for the general corporate purposes for the company. Now, let's look at the financials of the company. The revenue has seen an uptick of 10,000 crores in FY23 versus 6,900 crores in FY21. The margins have somehow been hovering around the 5 to 6% mark, but they have seen a PAT going positive. They have incurred profits in FY23 of 41 crores, whereas for the last 2 years, FY22, FY21, they have been incurring losses. And let's look at the peer comparison. After listing, they will be competing with TCI Express, Mahindra Logistics and Blue Dart Express are amongst its peer competitors. Now, they have already raised 396 crores via 18 anchor investors, and some of the marquee investor names that have come forward are Frankel Templeton, SBI Life Insurance, Tata Mutual Funds and BNP Paribas are one of the few marquee names that have come forward. And if we talk about the total subscription, it has been subscribed a total of 2.8 times. The retail investors have subscribed it to 7 times. NIIs have subscribed it to 2 times, and the QIBs 1.3 times. So now we are waiting and watching for the listing of this IPO.
Absolutely, we will keep an eye on the listing of this IPO. But Goldman Sachs has initiated coverage on the Indian IT pack with buy calls on LTI Mindtree, Infosys as well as TCS. Winnie is joining here this morning to give us more details on this brokerage note. Winnie, take it away.
Good morning, and absolutely, we're seeing a note that is coming in from Goldman Sachs on IT. When you look at it, LTI Mindtree initiating a buy over there with a target price of 6,310 rupees per share. For Infosys, they've initiated a buy and a target price of 1,600 rupees per share. TCS, buy rating initiation with a target price of 3,930 rupees per share. Now, for Tech Mahindra and Wipro, they have initiated coverage but with a sell rating and given a target price of 1,010 rupees per share. And Wipro, they've given a sell rating and a target price of 385 rupees per share. For HCL Tech, they have a neutral rating and a target price of 1,160 rupees per share. Now, overall, why is this initiation coming? One, they believe that the growth in FY24 for IT companies, yes, that could stay muted, but they expect an acceleration in growth in FY25, especially in terms of generative AI. That's going to be aiding both in terms of the revenue as well as margins for IT company, but on an impact will be on a gradual basis that, this will start coming in for the IT companies. In terms of margin outlook, also they believe that the margin outlook is improving on a lower supply side pressure. They expect the operating profits to growth to be at around 12 to 15% over FY25 and FY26, to be faster than the revenue growth as well. And overall, in terms of valuation, higher versus the history, but is higher than what we've seen in the past and the historical average, but in line with the relative to that index when we compare. So yes, higher, but historically it is relatively in line with what we would be comparing. Also, what they highlight is higher multiples are warranted to grow for growth for the IT and tech company spends as the industry is seeing better growth there. So let's keep an eye out on the IT pack on this on the back of Goldman Sachs report.
Vinay, thank you so much for all those details. But another company that is going to be in focus is the tractor maker Escorts Kubota. That will be in focus today, and it is on the back of the fact that the stock has scaled a fresh life high, zooming as much as 14% over the last 5 days. Let's bring in my colleague Shrishti to help us understand the factors that have aided this rally.
Well, yes, Escorts is sitting at a life high levels, and look at the move in the past 1 month. Where Nifty Auto is down by 0.8%, Escorts has shot up by 24%, and that's after its Q1 report card, where we have seen the company losing its domestic tractor market share. The profit was actually fueled by the other income, and they've also informed that the Kubota merger has been pushed by another 6 months. But definitely there was a surprise onto the number front, especially on the margins. So let's try and understand what the street investors are penciling in and why the excitement in the stock price. Firstly, talking about their margins coming in at 14%, the company expects it to maintain those levels. They have kept the tractor growth volume guidance intact, where they expect the tractor industry to grow in low mid-single digit in terms of volumes for FY24. Thirdly, the Kubota synergies are still expected to kick in terms of the new product launches as well as the export opportunities. And the fourth impact is the improved prospects for their railway and construction business. And lastly, don't forget that it is going to be an election year, so the demand is expected to be on the higher side. Coming to their railway and construction business, what we see that the contribution has increased substantially from just 6% of contribution from the railway segment in FY17, that has now shot up to 13%, and there has been a significant improvement into their EBIT margin. And the company expects double-digit growth in FY24 as well. Their order book is quite healthy, and when it comes to their construction business, their EBIT margin has improved from a negative figure in FY17 to a 7.6% in positive side in Q1, and they've guided for a high single-digit margin for FY24. FY28 growth outlook, the company expects their revenue to be over 22,000 crores, EBITDA margin to be in mid-single, export contribution to grow over. So all these factors definitely are play. But lastly, having a look at the valuations, can't say that it is cheap, because 1 year forward multiple is coming in at 26.2 times, or when it comes to the PE, but versus the 5 years average of 16.2. So can't say that it is cheap right now given the move that we have seen in Escorts, but definitely a lot many triggers at play.
Alright, Shrishti, thanks a lot for taking us through all those details. That is why Escorts Kubota will be in focus today. But two other stocks that will also be in the spotlight are CG Consumer and MedPlus, after the management has sounded a confident note about the growth in the current fiscal. Sharad gets us all the details of the management meet takeaways. Take it away, Sharad.
Well, yes, at first we'll be focusing on CG Consumer and looking at the analyst meet takeaways. The management has been bullish, and especially they are coming out with their 2.0 program, where they'll be actually forcing to drive the double-digit revenue growth. Now let's look at the segments, what the management commentary has been coming. For the fan segment, they're expected to power in the premium mix, because that's the higher margin segment, and also in the light segment, two important commentary coming in. The sales team effects, positive benefits are expected to kick in from September onwards, and also the expansion in the ceiling lights, that's expected to kick in the fourth quarter of financial year 24. In terms of the kitchen appliances segment, you're looking at it, they continue a double-digit year-on-year growth, and going ahead, they are planning to enter the eastern as well as the western markets where the sales is overall weaker currently. Apart from this, company is also looking at entering into 2 to 3 new categories which are the adjacencies of the current product portfolio. Apart from this, for the butterfly segment or Gandhimati appliances, they are the de-risking process that is expected to be over by the second quarter, which is the current quarter of the FY24. Apart from this, also the second company in focus would be MedPlus, and the management takeaways as per the Nuvama's report, they have stated that they continue to grow at a confident rate of 25% plus in FY24, and they expected to add roughly 800 new stores in the current fiscal. Apart from the expansion plans, there also the uptick is happening in the new pharma offering, where the MedPlus branded drugs are coming at roughly 50 to 80% discount. Apart from this, the margins, however, they have stated that they might hit in the near term. Apart from this, they are targeting at an overall on a consolidated basis on a long-term front, a 5% EBITDA margin growth in the next few quarters, and also the warehouse automation that could also save roughly 75 to 100 basis points and increase the operating leverage of the company. Lastly, the diagnostic segment that could achieve break-even by FY24 end.
All right, with that, it's time to wind down on this edition of Market Cafe. Snehi and I will take your leave. Thank you so much for tuning in. Don't go anywhere. The market is up next.